Namaskar. I am CA Anuj Goyal, Central Council member of the Institute of Chartered Accountants of India and the chairman of Committee on Financial Markets and Investors Protection of ICAI. I am really very happy that we have joined hands with the Investors Education and Protection Fund Authority IEPFA for this live tele lecture series on basics of capital market. And friends, the capital market, I think for the development of our country, our nation, I think it is very, very important that we can reach to the poorest of the poor and how we can aware the investors, the prospective investors, the students. And I'm quite confident that all of us will certainly see that how we can really do something very, very concrete for the cause of the society, for the cause of the nation through this tele-lecture series. And friends, the capital market. I think the capital market is a financial market in which long-term debt or equity-backed securities are bought and sold. Capital market channel the wealth of savers, the poorest of the poor, to those who can put it to the long-term productive use, such as companies or government making long-term investments. And now I think the public at large is reaching to the capital market, is investing in the capital market. And when we are even investing in the banks, then also we practically that amount is being invested in the capital market through the I will say the industrialist, and I think it is really practically each and every small investor is also the stakeholder, is the owner of the capital market and the industries as such. And types of capital market, if we see the types of capital market, primary market and the secondary market. When we do invest in the initial public offer of the corporates, it is the primary market. Any issue of new securities by companies first float over the primary market. The primary market always comes before the secondary market with regards to the turn of the transactions. The primary market has no physical existence like secondary market exists in the form of the stock exchange. And as far as the secondary market is concerned, the secondary market is where securities are traded after the company has sold its offerings on the primary market. It is also referred to as the stock market. The stock exchanges are the secondary markets. And nowadays, I think each and every investor is going in a great way in the secondary market also besides going into the primary market. Then functions of the capital market. Capital market acts in linking investors and savers, जो अपना पैसा सेव करते हैं और जो अल्टीमेटली इन्वेस्ट करते हैं in the capital market. Capital market facilitates the movement of capital to be used more profitability and productively to boost the national income. Capital market boosts economic growth. It mobilizes the savings to finance long-term investment, facilitates trading of securities, and it minimizes the transaction and information costs. So the capital market is really doing a lot of things, encourages a massive range of ownership of productive assets, quick valuation of financial instruments through derivative trading. It offers insurance against market or price threats. We are witnessing a lot of ups and downs in the market, and through derivatives trading, I think we can ensure that price threats. Then facilitates transaction settlement at the earliest, improvement in the effectiveness of capital allocation, and continuous availability of funds are there in the capital market. And we are having three very, very important regulators of the capital market: the Ministry of Finance, Security and Exchange Board of India, SEBI, and the Reserve Bank of India are regulating the capital market. And what are the functions of the capital market regulators? The growth of the economy is the primary responsibility of the capital market regulators. the capital market reflects the condition of the economy and also accelerates economic growth. It allocates the resources from the people who have surplus capital to those who require capital. Practically, when the investors are having small savings and they are not directly investing those savings into the capital market, they do invest into the banks, and ultimately those reaches to the capital market through mutual funds. Also they do reach to the capital market and encourage people to save. These regulators encourage people to save. The development of capital markets has helped the banking institutes to provide facilities and provisions to encourage people to save more. People might have just invested in land or gold in the non-existence of a capital market. मुझे लगता है कि अगर ये capital market नहीं होता तो लोग अभी भी land या gold में invest कर रहे होते. But now, as we are having very strong capital market, so now the peoples are coming forward to invest in the capital market. Then stabilizing stock prices. Capital market regulators have reduced speculation activities and also provided capital to the borrowers at the lowest interest rate. आपने देखा होगा कि पहले 20, 21, 22, 23, 24% पर कैपिटल अवेलेबल थी और आज 5 या 6% इंटरेस्ट रेट पर अगर कैपिटल अवेलेबल है तो दिस इज द ग्रेट फंक्शन of the regulators of the capital market, that the capital is made available to the industry at a very nominal rate of interest, and ultimately it is resulting a growth and a very competitive capital is available to the ultimate industries as such, and this helped in keeping away the prices of stocks from fluctuating. What are the instruments of the capital market? Stocks and bonds. Stocks are sold and bought over a stock exchange. They represent ownership in the company, and the buyer of the share is referred as the shareholder. And when we do take lesser risk, then we can very well invest in the bonds. The debt securities which are traded in the capital market are known as the bonds. Companies issued bonds in order to raise capital for the expansion of the business and growth. So we are having two instruments, stocks and bonds. The investors who want to take the risk, they can very well go for the stocks. Otherwise, if we want to have the fixed return on our income, then on our investment, then we can very well go for the bonds market. Then features of capital market. Capital market serves as a link between savers and investment. The capital market serves as a crucial link between the saving and investment, as it transfers money from savers to entrepreneurial borrowers. Long-term investment and helps in capital formation. The capital market offers opportunities for those investors who have a surplus amount of money and want to park their money in some type of investment and also take the benefit of the power of compounding. So they do go to the capital market, either in the share market or the bond market, and ultimately it reaches to the entrepreneurs. Helps intermediaries. While transferring shares and money from one investor to another, it takes help from the intermediaries like brokers, banks, etc., thus helping them conducting their business. Then rules and regulations of capital market. The capital market operates under the regulation and rules of the government, thus making it a safe place to trade. It is very safe to play in the capital market, as we are having very important regulators who are taking care of our hard-earned money. Then examples of the capital market. Suppose a company says ABC requires capital for expanding its business. So it plans to raise the required funds from the public by issuing new securities in the primary market. After issuing the new securities, the people who are interested in buying those shares, after doing research of the company, buy those shares through the initial public offering IPO process. After the initial buying, it starts trading in the secondary market, where the existing buyers and sellers start trading that security. So first IPO will be there in the primary market, and then the securities will be available for the trading in the secondary market through the stock exchanges, whether it is the National Stock Exchange or the Bombay Stock Exchange, like that. Then the capital market intermediaries. Friends, Financial intermediaries are the organizations that help in the transfer of channelizing of funds from those who have surplus funds to those who need it. They act as a middleman in connecting the surplus parties to the deficit ones. A classic example can be a bank that accumulates bank deposits and uses them to provide bank loans. Practically, we do say that even the poorest of the poor of the country, even a beggar, is practically contributing for the development of this great country when one do invest in the bank and the bank provide the funds at a cheaper rate. Practically, it is the fund of the poorest of the poor of the country. And the main financial intermediaries of India includes stock exchanges. These includes the NSE, National Stock Exchange, BSE, Bombay Stock Exchange, MCX, Multi Commodity Exchange. Then banks, insurance companies, pension funds, mutual funds are the capital market intermediaries. And what are the recent developments in the Indian capital markets? The Indian capital market have been going through various developments over the years, and the most significant of them have been new measures of risk management. Investment in capital market are exposed to various risks, though some are systematic risks, other happens as a result of unsystematic market activities. And there are various measures to reduce price volatility. Volatility is the fluctuation of price movements. It is the rate of up or down movement of the stock price. Volatility is regarded as a negative factor for the markets as it represents uncertainty and risk. After the introduction of index future trading in the year 2000, there was a relative reduction in the volatility of the prices. So now the Indian capital market has matured like anything, and I think it is very, very safe place to invest. Then circuit breakers have been introduced but to reduce large sell-offs and panic sellings. Sometimes it is also called a collar. If an index or a particular stock rises or falls a certain percentage of 10%, 15% or 20%, trading is halted by the exchange in that stock or index for a certain period of time to curb the panic and check for market manipulations, and it helps the investors to save their hard-earned money. Then investor awareness programs, I think we are trying our level best. The IEPFA is also trying its level best to see that how we can aware the investors on day-to-day basis. To make the markets more secure for the investors, the capital market regulators introduced the investors awareness campaign by making an official site for this. Then investigations. In case of any violation of the rules and regulations, the investigations are carried out by the regulator. We must have seen in recently in one of the IPO or FPO, we have seen that the SEBI has acted very swiftly and has done the investigation to protect the interest of the investors. Then T+2 settlement cycle. Currently in the Indian capital market, the settlement cycle is in the T+2 cycle, which is very, very good for the investors as such. Earlier, that settlement cycle was 10 days, 15 days. It was taking very, very long time. Here, T means the trading day, and the T+2 settlement means the settlement and delivery of the shares take place on the second trading day after the trade takes place. And then ban on insider trading. Individual possessing confidential information of a particular company can use the information to unethically profit from the stock markets. So there is a ban on the insider trading. The capital market regulators has made it clear and mandatory to